Okay, hi guys. Welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the traders and analysts at First Trading. Okay, we provide retail, institutional, banks and the hedge funds with analytical reports and trade recommendations on a daily basis. Okay, our reports are aimed at being both educational, profitable, and pretty concise. I'm sure Vicky or one of the other ladies at FX Street will post a link into our micro page on FX Street later on. Okay, I've been away for a few weeks for the holiday period. I'm quite glad I was actually out the market last week. It's been very choppy, and we're basically in the consolidation period. Okay, there's bit of, I wouldn't say unease in the market, but we've had some decent sell-offs, especially in the euro, and then the market is uneasy about what the next direction is going to be. And because of that, we've had sort of long periods of consolidation or choppy price action. Now this is, I believe, to be combined with low liquidity in August, the holiday period. Also, we've had the Olympics. If you've ever been watching Bloomberg or CNBC, and they're interviewing sort of bank traders, you'll notice that most of them have got the Olympics on in the background. So the focus has been away from the market to a certain extent. A lot of it's been news driven. Because of the low liquidity, we've had very quick moves, and trend followers or people that are purely following trend indicators are going to get chopped up because the market is moving quickly. By the time your indicators are kicking in, the majority of the trends are either gone or it's hard for you to get on that trade, and you're getting quick reversals as well. Okay, I mean, looking at sort of weekly charts, we've had a little net change on most of the dollar pairs last week. Cross currencies haven't been particularly favourable. There's been verbal intervention. We had obviously Draghi before I went away on a holiday that was bullish about the euro. Don't bet against the euro. He had this massive spike up, and then he did absolutely nothing at the meeting, and then we had that sell-off. So what we're going to look at today is I'm going to talk you through the indicators that I use. Going to talk not necessarily scalp trades, but we're going to talk about sort of getting into short-term trends. Okay, so trying to read the bigger picture, still looking at the bigger picture, okay, on the major currency pairs, but then trying to trade these intraday moves, and looking at candle formations, having a look at resistance levels. Might even start looking at points of control on market profile a little bit. Everybody else got sound? I'm reading that I've got sound. David's just saying that he hasn't got any sound with him. Okay, thanks, Mike. And basically trying to, my ambition and most people's ambition is to obviously get onto a trade, try and bleed a trade. But it's also about money management as well. So I'm going to talk to you a little bit about how I try to build positions, but how I'm also very wary about locking in some profit in these consolidating markets to try and bank some and then run a balance of the trade. So we're going to try and get into all these things today. Okay, first of all, the first chart I've got up is cable. Okay, I've taken the Ishimoku cloud off because it might confuse matters and there's too many lines on the chart. So we're basically just going to purely look at price action at the moment. Now, going to the weekly chart, one trend indicator that I use, which I think is very good to inform you of consolidating periods, is the RSI. Okay, there's two settings here. I've got an RSI 1 and an RSI 2. The RSI 1, which is the top one, is on a 15 setting, which is married to my EMA lines on the charts, which are the blue and red lines. And the next one is an 8 setting, which is a quicker trigger. Okay, and I'm looking at overbought and oversold areas, but I'm also looking around that 50 line as well. Okay, because if we trade around the 50 period for a period of time, it warns us of consolidation. And if you look to the bottom of this chart at the moment, you can see that we're basically bang on 50 on both of these RSIs. So it's showing an area of consolidation. Okay, the weekly chart, well, we've made higher highs. Okay, and we've got upside price action sort of capped by 157.68. So the medium-term bias looks to be forming an ascending triangle, which has a basis to break to the upside. But because of the choppy price action, okay, we just want to try and get intraday moves to get on these short-term trades. Okay. Just note last week's price action. I was talking about the fact that we're consolidating. Okay, spikes bought for the last 3 weeks. Okay, so it's showing that these dips are attracting buying interest, but it's also showing last week that the whole range was inside the preceding week's candle formation. Okay, which is basically an indecisive candle. So we can use all these different candles in all different time frames. The ones that I like to use the most are indecisive inside candles, or aramis, excuse me, or the bullish or bearish outside candle. Okay, and by that I mean that I want the candle to fully engulf price action from the previous week or hour or day or even 5 minutes. So daily chart, we can see it a little bit better. Just if you're wondering what these shadowed yellow boxes are, they basically show me on this chart package whether or not we have a reversal candle, okay, an outside or an inside bar or morning doji star, etc., or continuation patterns. And the moving averages, we've got to be looking at the moving averages as well. Okay, so we've got still a period of consolidation around 50, and the moving averages are starting to tighten up. So that's basically showing that there is no trend. Okay, because the way that the moving averages are formulated, obviously, if there is no trend, then they start to come together. Okay, as we start to trend, they move away or they open the mouth. Okay, there's some people use what they call a crocodile format with moving averages. They put loads of different moving averages on a chart, and as the moving averages move away from each other, as the trend builds, okay, then the crocodile is feeding and the mouth is open. Okay, as it starts to non-trend, and again this can be used in all time frames, as it starts to non-trend, then these moving averages come back together, and the crocodile is not feeding, okay, or non-trending as it closes its mouth. Okay, so again, daily, we had a doji day yesterday. Didn't really give us much indication of further price action. We had a small buy-in yesterday, but it didn't produce much at the end of the day, basically. Okay, so then we break it down into time frames, and the time frames I'm looking at, okay, I've looked for weekly, daily, 240 minutes, and then 4 hours. Now, we want to be looking really for reversal formations on the higher time frames. Okay, so also we have this very bullish candle which took us up. We then had a dip lower, which looked like a flag formation actually yesterday, which instigated our buy trade. Okay, and then we broke the flag, but then it stopped, and it's now forming this upward wedge formation. Okay, and a wedge formation has a bias to break to the downside. So again, I'm breaking it down through time frames, and I'm looking at this top trend line. So we pushed higher this morning, okay, but we were restricted by this top trend line, and then we start to move lower, and then basically I want to get it down into shorter time frames, and I want to get some sort of confirmation. Okay, so I want to look for impulsive and corrective moves. Now, impulsive moves are quite easy to see. Okay, so it's a move aggressively in one direction. I haven't got it on this chart package, but IG charts, IT finance charts, pro real time, they have an indicator on there that gives you an angle of attack or an angle indicator. And you can see just visually that if I was to draw a trend line down here, so obviously this is an impulsive move to the downside, and then this move higher is corrective. Okay, so we can see the angle of attack, and then we want to be using our fib levels. So we're building a picture. Okay, that's the main thing in this short-term analysis. Okay, we don't really want to be using our moving averages. A lot of the time I use the moving averages for support and resistance, and I'm going to show you that actually quickly now, because this is where I get my bias from. Okay, I get my bias from the 50. Okay, from the 50 RSI. So we're still bullish on the hourly, but you can see how we're making lower highs on the RSI. So it's dropping off, okay, as we're in this wedge formation. And then I'm using my exponential moving averages as support and resistance. What will have a tendency to happen is we'll get bullish or bearish candle formations around these moving averages, okay, these EMAs. And we can see here this morning, okay, if I just draw that onto there. So I've got my EMA here. It's also this blue line just underneath it is the point of control. Now, that's going into market profile. I won't talk too much about market profile, but basic market profile dictates that the point of control is basically in the middle of where 70% of the price action has been today. Or point of control dictates that that's where the smart money, i.e. the bank traders or the pit traders, are happy to see that currency pair or that commodity or that fixed income, that bund or bobble or schatz or whatever you're looking at. Okay, so that's the blue line. So we've got two areas here that showed support this morning. So we get the sell-off. We don't just sell into the sell-off, because what we're looking for is we're looking for a bounce. Okay, so we're looking for lower highs. We're looking for a corrective sequence, okay, to produce a bearish signal. Okay, so here was our move down. We then hit the point of control. We also hit our EMA where I put this horizontal line, okay, on the hourly chart, and then we get this corrective period up. Now, at this point, we want to be using our fib retracement tool, which all of you should have on your chart packages. Okay, this is 50, 61.8, 38.2. Now, after strong sell-offs, a lot of the time the market will only move back up to 38.2. 50 really we'd like to have seen on a second wave correction. They only moved up to 38.2, and then what I'm looking for again is a three wave pattern. So strong sell-off, a three wave corrective pattern, and then this area here is my signal to get short, okay, because of the chart formation. So I'm using the so I was just reading that 156.82.83 support. I'm using the hourly chart, the 4-hourly chart for my chart formation, and then I'm ignoring all the oscillated indicators, okay, on the short-term time frame to purely trade price action. And here, let's just get this little tool up that I've got, highlighter. Can everybody still see the chart? Sometimes it drops off. I'll just refresh the camera just in case. Okay, and here, this is our signal to sell. Okay, we've got an inside bar, an inside Arami candle after a three wave correction, and then this is the trigger candle for me. Okay, we get an outside engulfing, so we get indecision, we then get another spike to the upside, and then we get this outside engulfing candle, and that is the signal to get short. Now we can either pull the trigger on the close of that 5-minute candle, because remember we're trying to scalp here, we're trying to just build intraday positions that hopefully we can run a bit longer. Okay, so we can either pull the trigger, let's just clear that off again, at the close of the candle, or if it's a very deep engulfing candle, and sometimes we use the Arami. Okay, would you enter short 157.02? The low of this candle, let's take this off. Okay, the close of that candle is 157, the figure. So, as I said, if it's a very bearish engulfing candle, then I'll look to the Arami level. And this, if you see on this this chart package, it gives you the Arami levels of these large candles. Okay, and the Arami level is basically 50% of the open and the close of that that candle formation. Here, it's not that great, so I'll probably just trigger the short at the close of the candle. What we're getting at the moment, we're getting a slight pullback. I'm going to watch price action here just to see if it rejects this channel on the way back up. A lot of the time in trading, when we do get breakouts, okay, we get a retest of the breakout level. So if we're in a channel, we break out the channel, what the market will have a tendency to do is come back to retest that breakout level. What I need to see in my trading, my personal trading, is I need to see the hourly close. Okay, this is my pivot point, if you like. Okay, if the market can break and close below this EMA on the hourly chart, then I'm then looking for a bearish bias further. Okay, if it can't break and close, then I've taken some off at that level, so I'm selling here. Okay, I take some off at this level. My stop is still above the high. Okay, if I do get stopped out, then I've got a flat trade, and that's when we're talking about this money management. It's very hard to manage a trade if you've only got one unit on and you can't take any of your money off the table. Now, most of these retail FX sites that we use now, we can trade in 50p or a pound or £2 a point. Okay, so it does give you the opportunity to manage your money. Okay, to take half of it off, get your stop into near entry, and then to try and bleed it. Obviously, what we're now looking for, we've also got a crossover on the exponential moving averages on the 5 minutes. So as you can see, this morning just moved up and bounced off the red EMA. Okay, and now we've got a crossover, and what we sometimes get a tendency to happen is just a move back up to test these again. Notice we're still 50 or under 50 on the RSI. So the short-term bias is still bearish, even though we're getting a small correction off this support level on the hourly chart. If we can manage a break of 156.86, then this wedge formation target level will be low 156.56. A high point at the low, okay, which is 157.15, which is what, 45.50, approximately 60 pips. Okay, so we get a break 152, 156.26, horizontal line. Okay, so that would be our target level for the whole trade. Okay, the actual first target level on a break would be here, 156.56. So talking about managing your money, okay, back to 5 minutes. This is a signal to trade, or this is a signal to get short. Okay, this is where one unit should be taken off. This is where the stop should be placed, or where I would place the stop, I should say. Okay, look to increase exposure on a clear break of here. So we've improved our average again. So we've locked some in. We then increase the size again on the break. Again, another half unit or £1 or £2 or whatever your unit size is. And then try and bleed down 1 unit, 2 units, okay, to take the trade from here. So if you can see, the risk reward is pretty good. In around this level, stop here, okay, lock some in, a break here, and our average is going to be around here. Okay, first target is easily 2 to 1, and the third target is probably more like 4 or 5 to 1. So risk reward's good. Chart formation's pretty good. Short-term pattern formation's pretty good. But it's obviously got to break through that wedge to produce a sell trade. Okay, any questions about cable or how I try and scout these intraday moves with chart formations? Free drive pattern on 4 hours, 2 hours. I can't really see it myself. I can see what you're saying. 1, 2, 3. If that was a free drive pattern, 1, 2, 3, then it should have broken lower here. How do you see cable for the long term? I suppose it's the top of the wedge. Well, if it makes it to the top of the wedge again, I mean, in most chart formations, let's just clear that off. In most chart formations, we get a break on the 4th attempt, triangles and wedges. So there's nothing to say that we couldn't make another move up and then attack on the fourth attempt. Can cable break at top side? Yeah, of course it can. Anything can happen. The medium-term bias, which is this daily ascending triangle formation, has a bias to break to the upside. But the whole point of this presentation today was to try and show you guys how to trade short-term markets, okay, with this choppy price action. I mean, last week, let's get rid of all of this. Last week we had 1, 2, 3, 4, virtually 5 days, and yesterday 6 days, where there's high volatility, okay, where there is no trend. We're virtually in between the moving averages, okay. So the bias, there is no bias. So you've got to work on these short-term patterns to try and just take a bit of money out of the market, okay. We're not standing in front of freight trains. We're just using short-term trading techniques to try and nick some cash, basically, and to try and get onto potential sort of intraday or bigger short-term moves. Higher highs are buyers bid there, did they? I don't quite understand that. Yes, we have got higher highs. As I said, we had higher highs, then we broke to the downside, and then over this rejection, we've got a higher high and a higher low yesterday. As I said, it's the short-term, the medium-term bias is still to the upside. We're actually long, I think, euro dollar around 123 on a medium-term bias, but on a short-term bias, euro dollar could quite easily move further to the downside. Let's have a look at something else. We'll come back to cable, see how she's getting on. Euro yen. Okay, let's get rid of the cloud again. Okay, here visibly on euro yen, the bias is to the downside. Okay, so this is a weekly chart. We've got these inside outside bars at or around our exponential moving averages, okay, that take us to the downside. Here I can see a 5-way pattern. I'm not fanatical about Elliott wave, which we discussed before. But when we do reach the end of a fifth wave, then I am wary of consolidation, corrective sequences, etc. Okay, so we then get onto a daily. So here we can see that we're in a corrective channel. Okay, quite easy to take trend line or trend channel off these lows, okay, and produce quite a decent buy signal on the 10th of August, okay, which was what, last Friday, okay, to take this pair higher. But are we going to be overstaying our welcome? Now, in the corrective sequence, it is choppy, and that's what we're trying to do today, because for the last 2-3 weeks, as I said at the start of the seminar, we are in a corrective sequence. So it's quite easy to trade the trend. When we have decent long-term trends that are here, then all we have to do is sell rallies, sell 4-hour, hourly, bearish engulfing or insider army candles with confirmations, and we just keep on taking that trend lower until that trend has changed. Excuse me, 1 second. And when we get these corrective sequences, which we have here, this is when most people get chopped up, because we're either getting to the trend too late, because we're looking at trend indicators or trend following indicators, or we get into them and we just get chopped about because there's too much intraday noise. Okay, so here, euro yen, again on the 50 line, virtually on both of the indicators, a move off the base, and then getting down to shorter time frames. So I've still got that on. Okay, we then want to be looking for chart patterns. Okay, again, overbought on both of the RSIs, and we can see here a 5-wave pattern. So we've got 1 wave up, corrective sequence down, okay, up to around 61.8, 3-wave sequence down, and then this move higher. And if we, excuse me, let me give you this tool. Okay, and if we just move it down a bit, we can see that we've got a topside extension around 97.40. Now, you don't have to be a rocket scientist to see where a previous high was situated. Now, this is a bullish count, okay? So after a bullish 5-wave count, we should expect a 3-wave correction. So, sorry. So this is euro yen. I hope you've not missed all of what I've been saying for the last couple of minutes. So we bought it off, or it was bought off the trend channel. Okay, and then we need to look at shorter time frames. So here we've got these extension waves, or 5-wave extensions. So 1, 2, 3, 4, 5. Okay, Elliott wave enthusiasts or anybody who looks at wave sequences will dictate that this should now correct lower before the next leg up. Okay, doesn't take a rocket scientist to see that we've got previous resistance here, okay, and 261.8 here. So we know that this is an area where we could potentially get a 3-wave correction. So where do we correct to? Do we want to sell into that correction? Well, I don't particularly, because I like to follow trend, not try to fight it. So I'm then looking for areas where I can get long of euro yen after the correction, and this is where, you know, we've got to be patient. We can't expect the market to give us what we want when we want it all the time, and the corrective sequences, which we're in long term, okay, but we also have this short term corrective sequence, are by far the hardest to trade, because a lot of the time we can't tell where they're going to turn. But what we can do here, okay, we can, excuse me, just take all of those off because we don't need them for the time being. What was the warning signal near the high? Well, the warning signal was the insider army, okay, because it shows that this upward move is near exhaustion, okay, and then the break of the bearish outside bar is a confirmation that we're in this corrective sequence lower. Run some fib projection, Robert Miner style. I don't know who Robert Miner is. The potential end of fifth wave. Okay, but these are my points of support. Okay, potential head and shoulders formation. So we've got resistance here, we've got support here. So we extend it out, okay, and down towards this level. What I will look for if I get down to this level, okay, is buying sequences here at my second line of support. It's a right shoulder support, okay, and I'll also look for probably a test of the 50 and then a rejection of the 50. So this is confirming that the trend is still to the upside. Getting into short sequences, okay, you can see how choppy this has been. Let's just put 15 minutes on actually. But this confirmation, so we've got the inside, okay, we've got the move up, and then we've got a lower high. So that was our first indication that we're in the corrective sequence lower. As I said, these are the hardest of the wave formations anyway to trade. And what I'd expect is a bounce pretty soon. To form a three wave correction. So I won't be looking to buy here for this small correction. I'll be looking to buy at or around 96.60. And the way that I build up my positions is that I look to short-term time frames to try and build into it. So I've got my area that I want to get long or short at. Okay, I'm then looking for 5-minute engulfing or insider army candles with confirmation. I'm then looking to build it. So then I'll trade 2 units. Okay, try to get some off, and then as it confirms, as it moves higher, and as the trend confirmation changes, i.e. the moving averages start to come my way, the RSI pushes back above 50, then I start to build that long position with my view. Okay, constantly moving up the stop loss as the trend continues. So I'm still trading with my overall view in this case, but I look to build it. I don't just go in blindly and buy 4 or 5 units because I can improve on my trade as she moves up or down. Any questions about euro yen? So that's my bias on euro yen. I think we move lower in euro dollar. Might bounce a little bit soon, but 96.60 is going to be the area where I'm going to start to try and get long again. Any questions? Good. I'd like to say your name, but I can't. Is it Gangster? Let's have a look at another one. Euro dollar, everybody's favourite. Okay, yesterday, this line was my line of support yesterday, which got broken. Okay, talking through the long trade yesterday. So we had a long trade on yesterday. Why is it exhausted today? How far can we? I'll have a look at dollar yen, but that's a bit of a non-event really at the moment. And how far can we expect this correction to move lower at the moment? Okay. So just get rid of some of these indicators. And notice here, okay, this it does work extremely well with 50 RSI. Okay, comes up, struggles with it, moves around the moving averages, but there's a chart formation in here. We'll break it down from the time frames again first. So weekly, again, 5-wave pattern down on this last leg. We had an engulfing weekly candle off the base, which told us that our bias should at least be short-term bullish. Okay, looking to buy dips after that bullish engulfing candle on the weekly chart. Why they know? Listen. Where was I? So we're in this corrective sequence up. Okay, after even this daily chart is showing a 5-wave pattern down here. Okay, and then we're in this corrective sequence up, which again, as the webinar dictated today, is the hardest area to trade. Okay, so breaking it down through time frames again, and we can see this large corrective channel that we're in at the moment, and we've had this move back up. So here, an engulfing 4-hour candle, and then yesterday at the base as well, which is really the prime area that we want to see engulfing or inside candles. Sorry about that. So we've got this engulfing candle, we then get this other engulfing candle, and then we get this move back up. Now, we didn't take a long trade this morning because we're looking at a target nearly being met very early on, and risk reward wasn't good. So we then take it down to 60 minutes. We'll talk about how we produced a long trade yesterday. Okay, so remember, this is the 4-hour engulfing candle. So this is basically giving us that 4-hour engulfing candle, and then we get inside bars. Okay, and it corrects lower. And this is what we're looking for. We're looking for a correction and a confirmation, or I'm looking for a confirmation through through my exponential moving average to take me back up. Okay, to take me back to the upside. Now we get it here. RSI turns positive. Okay, and because it is a bullish outside bar, I get this harami, which is what we talked about before. Okay, so we get this harami line, and if you can see, the market then corrects lower, uses or buys the dip underneath this harami, and we get another bullish engulfing candle. So we've potentially got 3 bullish engulfing candles that are pushing or showing us that we're reading a book. Okay, so it's showing us that the market is looking to buy dips. Okay, so then we're looking for other confirmations. I don't know what that looks like, by the way. Then we go to our we start building the picture. So this is resistance, as we can see. So we have previous resistance here, resistance and resistance. Okay, we actually bought it down around this level, but the break to the upside, we then look for the measured move. Okay, so we take the low, which is 122.42. We then take this level, which is 123.15, which is 58, 63, 73 pips. Okay, and then we look for 73 pips on the top side, because that is our projected target. So we've got 73 pips here. We want 73 pips from here. Okay, 73 pips is 123.88. 123.88. Come here. Okay. and there's the top side from today. Okay, 123.77. So we're also using a little bit of correlation. So we're looking at all this combination of different currency pairs. We've got euro yen towards 261.8%, indicating a sell-off or a correction that can be bought into. Okay, we've also got previous high up here, okay, which lines up with our triangle target level, okay, our 73 pips. Okay, so we've also got that euro dollar bias, and if you really want to look at, we've got some divergence here as well. So the oscillators make a lower high, the chart makes a higher high, forms an inside Arami candle, and then breaks to the downside. Again, I'm not really looking to trade this correction. But expecting now, we'll leave that line on. We'll take this one off. We'll take it back to 60 minutes. Okay. Notice how my EMA is coming in here as well. So I'm expecting a choppy move down. Might even bounce up after US retail figures this afternoon. Could be the catalyst for a small move higher. Okay. And then that area here, 123 sort of 15, 123.30, is the area that I personally would look to get long. And again, probably just spiking through the 50 RSI on the 15 setting. Going back to other techniques that we can use, we can't ignore candle formation, okay, especially in these choppy markets. So our main bias should be off candle formations, but we also need to know where there is support and resistance, okay. And here, as we move down, as I said before, I use these EMAs and the bias off the RSI to give me areas to look at for support and resistance. And this was a great trigger here. Obviously, I didn't get it because I start work at 4:30 in the morning, but I wasn't around at midnight. But this one here is a great trigger to get long, okay? Because we're making higher highs. We're not up towards the target level yet. We get a bullish engulfing candle. It's above the RSI. Okay, and then obviously it just keeps moving up. Inside Arami, okay, choppy down. We have tested this, and this is what I'm talking again about, these RSI levels. If we go, excuse me, if we go down to 5 minutes, similar to what happened on cable, you can see how the market moves lower, okay, in the 5-way sequence actually, which I hadn't noticed. But notice how it just corrects off these EMAs. So it corrects off the EMAs, and as I said before, once these have turned over, and once we're underneath 50 on the 5-minute chart, then it gets capped. Okay, it gets capped by the EMA, and it gets capped by the 50 RSI as we move back down. But like I say, it's a corrective sequence, and I think we're due a little bit more of a move up before we move back down. Interesting. I'm looking at selling euros shortly. This one over cross, it closes red. Don't really look at euro Aussie. I will do if you like. I hope you can still see that. Let's shows you the last time I looked at euro, I think. Inside week at the moment. This is consolidation. I'm told by Vicky we've got to wrap it up in a minute, I'm afraid. Double bottom. Morning star formation. You've got to be careful of that one, really. Looking at this, I'm not trying to put you off, but that looks like quite a decent formation. Oops, a little man there. 40 minutes. Come on. I haven't got a reversal pattern there. Like I said, it looks like a big double bottom to me, which should have a target area around 118.50. I'm bearish on Aussie dollar, by the way. 60 minutes. 60 minutes, that's a fib extension tool. Pause around 161.8. $240 lines up here. It's a commodity pair, so it can overextend. And it just brings this back into mind, doesn't it, really? For me, anyway, I don't try and counter trend, and at the moment, the short-term trend to me looks still to be up to the upside. Like I said, it's only my opinion, but I mean, by commodity pair, normal. If you look at wave extensions, normal currency pairs will extend to 261.8% or around about. A lot of traders say that smart money is in commodities. Like commodities move first, i.e. dollar CAD, Aussie dollar will have a tendency to move before any other currency pairs because they're linked to oil, etc. What has a tendency to happen is that anything with a commodity pair in it, like Euro Aussie, can overextend through 261.8% because wave sequences in commodity pairs, or in commodities I should say, like corn, wheat, well, any commodity pair, will have a tendency to move to 423.6% as opposed to 261.8%. So that fifth wave that you look for is hard to predict the top, as it can overextend through 261.8%. Let's just go back to the cable got on. I don't think it's gone anywhere, is it? 5 minutes. Just consolidating before the figures, really. Refresh the cam there. Yes, that's true. And that's why New Zealand dollar does trend so well. Euro sterling. 261.8% this morning. We actually got out of a, let me just make sure you can see that. We got out of our, or took some profit here at 78.86. So wave 1, 2, 3, 4, 5. There's a song in there, isn't there? Okay. I think small bearish and then bullish. I think 80 is fair value, which we've been talking about for a while in Euro sterling. But at the moment, again, we're in a choppy corrective sequence. I think the next bias is to the upside. I'm going to have to break this sort of level 78, 79, 56 to get properly long. Okay, guys, we've got to wrap up now. Any questions before we go? To make sure I've not missed anybody. I'm trading an evening star on 4 hour. What was that? Oh, Euro, was it? Okay. Yes, it's normally £75 a month, but we offer a 1 month trial for £25 a month. And for that, you get intraday calls analysis on 8 FX pairs. No, I don't look at pivots. I do look at point of control market profile, but I don't look at pivots. This software is called CQG. Commodity pairs. If you use a wave extension tool, which you've got here, okay, on this 60-minute chart, okay, as you can see, if you're looking at wave patterns, if you are into cycles, 1, 2, 3, 4, 5, okay, 1 is 100%. Third wave, fourth wave correction should be around 161.8%, and the fifth wave extension should be 261.8%. Commodity pairs can push up to here for 23.6%. Okay, that's me done, guys. I hope you've enjoyed it. Come and give us a look or send us an email if you fancy it. It's ian.coleman@pia/first.com. And good luck with your trading. Okay, thanks very much. Bye for now.